Today on the podcast, I sat down with Chris King, founder and CEO of Eaglebrook Advisors. Eaglebrook Advisors is a tech-enabled investment manager building the bridge between wealth management and digital assets. Eaglebrook offers independent registered investment advisors and asset managers the first secure and compliant separately managed account platform in the digital assets market. Today, we're excited to announce that we co-led the Series A. Without further ado, here's my conversation with Chris King.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. My name is Sean Judge. I'm joined here with founder and CEO of Eaglebrook Advisors, Chris King. Chris, thanks for joining us.
Sean, of course, this has been a long time coming. I'm really excited for this conversation.
Likewise. Well, today is a big day for Eaglebrook. We're excited to announce the Series A investment. Castle Island co-led that round, and I'm thrilled to be joining the board. Chris, do you want to share some more details on the round?
Yes, of course. So we've raised a $20 million Series A, co-led by Castle Island Ventures. Obviously, Sean is a GP there. He's joined the board, as well as Brewer Lane Ventures. John Kim is the former president and CIO of New York Life. He's the founder of Brewer Lane Ventures. So really excited to have them on board. Also participating was Civil Capital, Jump Capital, Avon Ventures, as the other investors in the round. So really excited to have all those individuals invested. And they're also joining existing investors, heavy hitters in the wealth management space that include Rick Edelman, Mark Cassidy, former CEO of LPL Financial, Marty Bicknell, Andy Putterman, Joe Mrak. So really excited to have people from the institutional VC space, you and Brewer Lane and Sybil and Jump, as well as large wealth management executives that have helped us build this platform starting in 2019 and getting to where we are now.
Terrific. Very, very exciting. Congratulations. And again, we're thrilled. I guess just taking a step back, it would be great to kind of have you share your personal background and how you fell into crypto.
Yes, of course. So I got into crypto in 2014. I was a sophomore in undergrad, and I did a case study on how to tax virtual currency. Back at the time, the biggest virtual currency was Bitcoin at a $5 billion market capitalization. So it was pretty interesting. From there, fell down the rabbit hole because it aligned with my interest in finance, macroeconomics, as well as technology. And it really kind of fit into what I was interested in at the time. From there, personally researching, investing, networking within the space. And then in early 2018, I joined the industry full-time as a venture capital investor at a firm called Morgan Creek Capital. We raised money from institutional investors and invested in companies building market infrastructure for this emerging asset class. Led deals into Coinbase, BlockFi, Bitwise, Bakkt, Tagomi, firms like that, to really, build the picks and shovels and the infrastructure that we're building compliant, scalable, secure investment solutions for mainly retail and institutional investors. And then to back up a little bit, my dad's a financial advisor. He's been an advisor for 35 years. I grew up interning for him at Merrill Lynch. So I understood the wealth management market, how financial advisors work with clients, how they invest in assets, how the compliance framework is done. So understanding wealth management, then also cutting my teeth in the crypto space, working with some of the most successful founders. I saw a major gap in a lot of information asymmetry, where everyone in the crypto space did not understand what an RIA was or what an SMA stood for. And everyone in the wealth management space back in 2018, 2019, even though there was client demand and advisor demand, a lot of the executives and decision makers were basically saying, hey, we think this is a fad. We think this is tulip mania. This is going to go away. This is highly speculative. This doesn't make sense. So there's a lot of information asymmetry, and as a highly underserved market, a lot of people don't understand. Everyone always talks about retail versus institutional. Well, there's a market in between that's a $30 trillion market in the US, which is the wealth management market, but it's very niche. It's not well understood. They have very specialized technology, a lot of regulatory compliance frameworks that aren't well understood. So I wanted to build the technology to basically unlock this capital. And another way to think about it is that, let's call it your 50 plus, 50 to 80-year-old client. They're not going to go on Coinbase themselves, wire over 500K, open up a trust account, and then trade that themselves. They do everything through their financial advisors, especially things that fit within the alternative investment bucket. So we really wanted to build the technology and the solutions to unlock that $30 trillion of capital that was held from these gatekeepers, which are the financial advisors. So we build technology specifically for these wealth management firms, as well as financial advisors. We ended up raising our basically seed round in October of 2019, started building and writing code in 2019. We essentially built this platform with one of the top 5 RIAs in the US, Mariner Wealth Advisors. So we work with their legal team, compliance team, operations team, investment team, client service team to make sure that this was fully turnkey for Mariner. Because if it was turnkey for Mariner, one of the top 5 RIAs is going to be turnkey for the top 2,000 RIAs, right? So that took us about 12 months to build that out. We went to all of the crypto custodians. A lot of them didn't even know what an SMA was. We were the first firm to build an SMA platform in the crypto market, which is why it took so long for us to launch. We partnered with Gemini Trust Company as our preferred and primary custodian back in 2019. We launched with Mariner Wealth Advisors in November of 2020. Since then, we've signed over 54 RIAs that are all over $1 billion. Most are over $5 billion. So we really work with kind of the top 300 RIAs as it's more scalable, less blocking and tackling. It's a lot easier to work with, get approved and work with more advisors. And actually, we just closed a deal, which we'll be announcing soon, with a $300 billion IBD. So now we're kind of starting the RIA space. We're crushing it there. Now we're moving to the IBD space and scaling up to the hybrid model. So we're really excited to continue building these solutions. Kind of what our mission and our vision is. There's kind of a few different layers there, but we want a direct offering in every single financial advisor's hands in the US, which is basically our SMAs, where the client owns the assets directly in their name in an institutional grade custody account, which we think will be the vehicle of choice over the next 5 years. As we both understand that this asset class is going to go from 2 trillion to hopefully 10 trillion over the next 5 to 10 years. So we really want advisors to have this as a tool, their toolkit. When they do go to allocate, they have the flexibility. We can get into why crypto SMAs, why they're just starting to become prominent, and why RIAs are selecting our solution versus private funds, OTC trusts, hedge funds, and all the other options.
Terrific. Yeah, it's a super helpful background, and it's incredible what you've kind of done in a short period of time. I remember back in 2018, I think you were the first person I met at that year's consensus. And then a few short years later, we're working together and you're building something pretty special here. So I guess just to step back, what are the main products that are offered today? And why did you develop SMAs? And maybe it'd be helpful to just kind of understand how the SMA market has come to be over time. Why was it developed and where has it found success?
There's a few questions in there. I'll start with the first one. So back in 2019, when I started the company, there was not many options for financial advisors. There's the public OTC trust, that's the GBTCs, and a few of the other ones that have come to market since. That was one option. There's tracking error, high fees, but you could point and click on your brokerage account. So that's what some advisors were doing, even though a lot of fiduciary investment advisors didn't think that made sense. Then the other option was telling your client to go put 500K in Coinbase, which is something called selling away, which is non-compliant. If they go put 500K in Coinbase, they deal with the security, their phone or email gets hacked, they lose those assets because Bitcoin's a bearer asset. You're going to get sued or you're going to get a complaint with the SEC, and it's not really a good option. So at the time, there were very few options. Some of the private funds had been spun up, but there's liquidity issues with private funds, obviously fees, and then also integrations to existing advisor workflows just didn't exist. You need to make it as easy as possible for the advisors to allocate, or else your product is not going to be available. So it's ease of use, seamless integrations, as well as wide distribution, which is really what we're focusing now, what our technology is building on the API, SSO, and those sides. So basically, we wanted to build something where the client owned the assets directly. It was secure in a qualified custodian, and it was seamless and integrated. So a very key thing that we have is that our SMA platform is integrated with all of the major performance reporting systems, Adapar, Orion, Black Diamond, Tamarack, you name it. We integrate it so you can see your Bitcoin, your ETH, your other DeFi assets, your yield products right next to your fixed income and your equities. So when you're doing a client performance report on a quarterly basis, you can see everything. And then also a big thing that incentivizes advisors is that they can actually bill on it. So everything can be integrated. So, all incentives are aligned with our product. So that's kind of, the first part of it. The second part of it is just the general preference for advisors moving into SMAs. You probably hear about direct indexing, ESG, all of these things. The SMA market is becoming a lot bigger because of technology. Previously, SMAs had 500K minimums, and I think a lot still do in the traditional kind of equities fixed income market because they were all accounts of one, kind of think of it like a fund of one, that it was flexible, right? And you can keep things, you can take things out. So it wasn't really scalable until firms had built the technology to do the ESG, the direct indexing, and managing kind of custom portfolios for, let's say, 1,000 clients at a time. So SMAs are becoming very popular in the traditional market. And we think the similar things happening, but SMAs are even more advantageous in the crypto market for a few reasons. The first one is that direct ownership aspect, which is important for a few reasons. One, it gives you the flexibility to, if you have one client that wants to go into 100% Bitcoin, you can do that in SMA. If you have a client that wants to go into our multi-asset strategy, you can do that. If you want to go into just a USDC yield product, you can do that. So it's a full suite of products and very customizable for each client because, as we know, every client is different. So that's a major piece of it. Also, we have no minimums in daily liquidity, which compared to some private funds that have anywhere from 7-day to 90-day liquidity, there's a big premium in that because Bitcoin, as we've seen over the last 7 days, can move 15%, 20% in 7 days. So that liquidity opportunity cost is extremely high. My dad's an advisor. Basically, he said he would never invest in a single asset product if it wasn't daily liquidity because you want to be able to get in and out at any time. So that's a major piece of it. And then the last piece is the tax loss harvesting, which is the major advantages of SMAs in the traditional space, where you can basically do tax loss harvesting. You're not owning a mutual fund that owns 50 securities. You're owning the assets directly. And with Bitcoin and Ether, there's no wash sale rules. So we have very sophisticated, if not the most sophisticated, tax loss harvesting tools and algorithms in this space, where we'll basically move the assets from custody, sell it within 10 seconds, buy it right back. Very little slippage. We actually also have no trading fees. And then that will move back to custody. Just building that workflow out and really strong smart order execution systems there probably took us 8 or 9 months. Even though it sounds like a very simple process, most people have to manually take the assets out of custody. So we can do tax loss harvesting across 5,000 accounts when the market dips, let's say 10, 15%, we'll execute that. I mean, just yesterday, we did it in like 400 accounts to give an example because the market, their tax loss were down 10%. So That we're seeing big reason why SMAs are becoming more popular, but not as popular right now is there's a little bit of friction because there's a separate custodian. So our SMAs aren't available on Fidelity, Schwab, Pershing, or TD Ameritrade. So really, we're trying to build technology to make this more accessible and essentially point and click because everyone agrees that the SMA structure is the right structure. It's just a little bit more difficult to access. So with the $20 million we just raised, the goal is to make this more accessible, enabled through our technology and hiring a fantastic engineering team.
Awesome. Well, that's great. Super exciting. And I guess when you think about when you were kicking this off a couple of years ago, what was the market reception then? And how has that evolved even just over the last 12 months?
That's a great question. When I first started, probably went to hundreds of RIAs. And in the summer of 2019, the answer was primarily no. I have to give a lot of credit to Marty Bicknell. He saw this and saw a huge opportunity. He saw the demand, even though it was somewhat unpopular at the time. And even in the fall of 2019, I think Bitcoin was at like 6 or 7K. So the fact that he kind of put his name on this and Mariner put their name on this helped the reception be increased. even in, I would say, late 2020, when we launched and did a big press release about our launch with the top three independent wealth management firm in the US, there still wasn't a ton of traction. But when the market went from 10K to 20K to 40K, that's where our inbounds became a lot more receptive, to the point where I would say it was like July or August. We were in a lot of rooms with decision makers at large multi-trillion-dollar IBDs and wirehouses, as well as the other large RIAs. And I heard something really interesting that I'd never heard before. They said, this is a defensive play. This is not an offensive play. We need to launch a solution. We just need to figure out how much effort it's going to take and how we're going to do it, because we've never invested in this asset class. We've never built technology in this asset class. So what we're starting to see is that this is a defensive play now. Every firm is going to have a crypto offering in the next 24 months, but figuring out how to do it securely, compliantly, and as operationally efficient as possible on the technology side and the integration side is what we try to solve as we're working with these decision makers and executives at these large IBDs, wires, and RIAs, as well as TAMPs and asset managers. We kind of work with all 5 of those different client types, and they're all a little bit different. But our core infrastructure and technology, the compliance, the security, the scalability is really important. So really excited to start working with those firms and announce a few big deals over the next few months.
This episode is brought to you by Compass Mining. Compass Mining is the world's first and largest online marketplace for Bitcoin mining hardware, hosting, and ASIC reselling. Bitcoin mining is only getting bigger, and so is Compass Mining. Compass is adding 280 megawatts worth of hosting capacity next year, with more to come. That's over 6 times Compass's current hosting capacity, meaning more people can mine Bitcoin. With Compass, anyone can mine Bitcoin. Start mining your own Bitcoin by visiting compassmining.io today.
So it sounds like a lot of the interest has been driven kind of by some of the price action. And, have any of the conversations really been opened up by other large institutional investors that are leading into the space, or even the Bitcoin futures ETF, like where you have an RIA sitting there saying, okay, like, is this the right product for our clients, or should we think about this more holistically and figure out kind of what the best opportunity is? Is it kind of all of these things in conjunction, or is there any kind of inflection point in the last couple of years that you see as driving a lot of that?
Yeah. So what excites me and why I'm excited that this is the time that we decided to raise is that we have not had that inflection point yet. A few players, Dynasty, Mariner, a few others in the independent space have put their flag in the sand and said, hey, we're doing this. I think that helped get us to 54 RIAs. Even though that's mainly in the independent space. I think sometime over the next 6 to 12 months, it'll probably be with us. A large wealth management firm is going to say, hey, we are launching this, and we think, like just how Ray Dalio said yesterday, hey, 2% makes sense. No one in the wealth management space has actually said, hey, we are going to put 2% of our clients' assets in Bitcoin. That is bound to happen. That's going to be a big inflection point where all the other CEOs are going to look around and be like, okay, we knew this was defensive. We were kind of waiting for someone to take the perceived career risk and actually do this. Once that happens, I think it's just going to be a huge snowball effect, kind of the reflexivity in the market. It'll be a self-fulfilling prophecy where all these firms are just going to say the same thing. That worked primarily with the wirehouses. Once kind of like one of them says, hey, we're going to do this, a lot of them follow suit. That'll probably be later this year, maybe early 2023, depending on price action and just how the general market goes, like more in the equities and macro market. But I could see a big IBD asset manager or RIA say, hey, we're actually going to allocate a certain amount using these crypto SMAs, which is what we're really excited about. That inflection point has not happened yet. And that's why I think some of the decision makers are still hesitant. You have to remember 95% of wealth management firms do not have a real solution. And the ones that do have a solution, like Morgan Stanley and a few of the others, you cannot solicit it. The client has to say, I want to buy Bitcoin for you to say we have a product. You can't say, hey, you should buy Bitcoin or you'll get slapped on the wrist, fired, whatever. So that's what a lot of people miss and don't understand is that advisors can't go out and sell this, even though some products are approved on MS and some other platforms. it has to be non-solicited. Once it becomes solicited and even gets added to model portfolios, the capital that's going to flow through the wealth management market into the crypto market is going to be the biggest source of net new dollars going into the crypto market, I believe, over the next 5 years.
That's incredibly exciting. Sounds like you're bullish. You're bullish. What does the asset mix look like overall? I'm sure it's evolved over time, but are most end clients saying, I want Bitcoin exposure, or are you seeing that asset mix kind of change into some of the longer tail assets?
So this is constantly evolving. When we launched in November of 2020, we were just Bitcoin, get exposure to Bitcoin, go from there. We launched ETH, basically a mixture between Bitcoin and ETH, 70-30, 50-50, 60-40, you choose, with a tax loss harvesting overlay and then a rebalancing cadence, monthly, quarterly, semi-annually, no rebalancing at all. So once we launched that became our most popular product by far. What we're seeing now is that I think the number is slightly over 80% of the new advisors that we're onboarding that are investing in our platform for the first time are selecting both Bitcoin and ETH. So we're trending towards not just Bitcoin on day one, but towards Bitcoin and ETH. And then our clients that have been in Bitcoin and ETH since February, March, April of this year are now saying, hey, we want a multi-asset portfolio with the longer tail assets, DeFi, other layer one, scalability, entertainment, gaming, NFTs, you name it. And we're going to publicly announce that we put together a kind of flagship product that answers that question. It's called Eaglebrook All Asset, where it has a allocation to Bitcoin and ETH, but then it has a 30% sleeve for the longer tail assets that's fully actively managed. Bitcoin and ETH are tactically adjusted. And then the longer tail assets, basically a list of anywhere from 5 to 15 names that we think are going to win in various sectors in DeFi, various sectors in layer one, layer two, and then obviously media and entertainment as well is kind of how we break it up. So that's kind of how we see it. So everyone asks, hey, won't a Bitcoin ETF blow up your business? The answer is absolutely not, because we are working with more financial advisors directly than any other crypto investment firm. We have more data than anyone, and we know the data is trending to these multi-asset portfolios. And the only way to allocate these multi-asset portfolios on a scalable basis in a democratized way is through our SMA pod.
And so when you think about just who you're selling into here, it's a kind of a B2B2C business, and it'd be great to understand, are you hearing that end customers are demanding crypto asset exposure, and in turn their financial advisors are saying, hey, we need to find a solution here? Or is this often financial advisors that are looking to accumulate more assets and stop potentially bleeding out to a Coinbase or other brokerages that people decide to go after getting crypto exposure?
Two different ways. And it's actually typically not the advisor.
Mm-hmm.
I would say most of our deals are driven by client demand, where there's so much client demand and assets leaving to go to a retail self-directed exchange that they need to launch a solution. That's how we work with about over half of our clients. The other half we work with, we don't talk to the advisors or clients at all. We are just working with the investment team, the CIO, the head of research, the analyst, and they are the ones saying, hey, we want to add a 4% crypto sleeve in your multi-asset Eaglebrook All Asset strategy. Let's walk through how to do that. And they do the diligence on our strategy, just like typical third-party alternative investment manager. So I'd say it initially was client demand. Now we're seeing a lot more sophisticated, more kind of institutional focused investment teams doing the work and then allocating across client portfolios where it's in discretionary portfolios. So they don't need to talk to the advisor. They don't need to talk to the client. The investment team makes the decision and then it gets allocated across. Now, the financial advisor would obviously have a conversation with their client saying, hey, we're doing this for these reasons. But because it's in a discretionary portfolio, the investment team makes that decision, not the advisor and not the client. So that's a trend we're starting to see. Once that gets announced that people are actually doing that and the names that are behind that, that's where I think we'll see a parts of the inflection point and a lot of reflexivity in the market for that to happen on a larger basis.
Got it. That makes a lot of sense. And in terms of kind of product roadmap, team, et cetera, can you share anything around what we can expect to see from Eaglebrook this year? It sounds like we got an exciting Eaglebrook All Assets product coming out. Is there anything else folks should be on the lookout for?
Yeah, so we really want to be that one-stop shop for any wealth management firm. So kind of like if you have a client that wants $10 million of Bitcoin, we can do it. If you want Bitcoin and Ethereum, if you want a custom portfolio, we can build it. If you want that actively managed portfolio, if you want a sector-based portfolio in NFTs, gaming, or DeFi, those are things. The DeFi strategy has been launched for some time. We're also launching a yield product where you can invest in two ways. One, you can invest US dollars and get a yield by lending out those US dollars to basically, market makers on the crypto side, and yields there are anywhere between 6 to 8%, depending on the, variable yield. And in a very similar way, you can do that with stable coins, USDC, GUSD, and loan that out. For right now, it's about 8%. So doing this all in one portfolio, we think is very interesting. I think at some point we would venture out into kind of like earlier stage token deals and potentially direct NFTs and DeFi yield and income, and maybe, some venture type things, but we're really focused more on the SMA. So that would probably be like a 2023 thing for the clients that are looking, across the spectrum. Maybe they want some, early stage DeFi or income stuff. Maybe they want some yield, and then they, want 70% of their portfolio to be in a multi-asset strategy. So a lot of things that are coming online. The one that's in highest demand is definitely that yield product, USD or stable coins generating that yield. Because if you look around, you put money into bonds right now, and you're losing money, right? There's no yield anywhere. I know rates are raising and things like that, but 8% for an over collateralized loan with US dollars, that's very attractive to me and to a lot of our clients. And it's just makes a lot of sense. And more net dollars can go into that. Like you can put 10% of your portfolio, 20% of your portfolio into that as your fixed income portion, as opposed to like crypto, beta, which we recommend anywhere from 2 to 6% for that. So we think a lot more dollars are going to come into that yield product. The double-edged sword with that is that, say we're super successful and raise a ton of money in that yield product, the yields are going to come down, over time if we're successful and as those products become a lot more distributed. But we think over the next 12 to 24 months, there's a big opportunity in yield in those specific products. And then in the team, we primarily hire out of traditional finance. So I'm really excited to announce, a few big players coming from the traditional finance world that are joining the Eaglebrook team to help really institutionalize this business, as well as improve, operations tech, as well as sales, marketing, distribution.
Very, very exciting. Well, it's a incredibly massive market that you're playing in. And I think you and I are both well aware that the crypto penetration in that specific market is pretty low right now. So it's super exciting what you're building. And again, we're thrilled to be partnered with you here. So I guess just in closing, where can people follow you and where can people learn more about Eaglebrook?
Yes. So our website, you can go there and schedule a demo of our SMA platform if you're a wealth management executive, decision maker, or financial advisor. So that's one area. It's www.eaglebrookadvisors.com. My Twitter is CJKing711. Talk about markets, what's going on in the wealth management space, obviously what we're building and launching at Eaglebrook. And then you can also email contact@eaglebrookadvisors.com if you're interested in getting in touch directly with our advisor solutions team to start using our SMAs or integrate it to your platform. So really excited to start working with more wealth management firms. And we have, this is a big announcement today, and we have a lot bigger announcements coming through the pipeline in Q1 and Q2 that I think will be that inflection point. And I'm really excited to see this market evolve and build these investment solutions for financial advisors.
Well, Chris, congratulations again on the round. And I know we're just getting started and we're fired up to be partnered with you here. Thanks so much for joining me today.
Thanks, Sean. Talk soon.